Good morning, good afternoon, and good evening to all. Myself, Vaibhav. In today's session of automated trading, we will be continuing to work with the Bill Williams Market Facilitation Index along with the price action. For the price action, we are utilizing the historical candles data. I hope you are well familiar with the technical aspects of the Market Facilitation Index as we have gone through it for last two session, and if need you can do bit of googling as well. Then comes the ATR. As you are aware, we mostly utilize it for optimizing our entry and exit points for the stop loss and the target determination as well. Before we get started for today's session, this is a standard disclaimer. Here I would like to remind you that this session is simply for the tutorial purpose and no claim is being made regarding the profitability or otherwise of the algorithms which we will be developing during the session. Suppose if you want to use any of it, I would recommend that you do extensive trial runs for many months and maybe even years to get a clear-cut idea of the efficacy of the said algorithm. And last but not the least, nothing in the webinar is to be constructed as an advice to trade or for any particular setup. With that, we get started for our day. Let's see what we are doing on the chart. Till yesterday's session, we completed the buy side. Later on, I realized I had omitted one condition which we will add in today's session on the buy side as well. But now the focus is shifting to the sell side. So for the sell, we look for the conditions when the market facilitation index was down and the volumes was also down, and then in the next hour the MFI went up and the volume also went up with downward pressure in the price action, and during such times we will be going for a fresh sell trade, fresh short selling opportunity. Suppose if we look here, the time is 12 GMT of 7th May, but it is green, so we also need the candle to have closed in red, and at the same time the volume and the MFI was going up. We have these consecutive bars at 18 GMT 5th of May, 18 GMT. No, this time also the price was going up, so our algorithm would have looked for a buy trade. Now let us go here. It is 0 GMT of the 4th May, so somewhere here. Now at this candle's closing level during the next hour, our algorithm would have looked for a sell trade provided this difference between the opening and the closing is more than 50% of the hourly ATR, and also we need this high and low difference to be more than the hourly ATR. So we will need to see if rest of the conditions are fulfilled. Suppose assuming rest of the conditions are getting fulfilled, our algorithm would have looked for a sell trade somewhere here after closing of this hourly candle, and then we would have utilized the risk reward ratio of 1 is to 2. For that we would have simply kept the ATR, hourly ATR, as our stop loss, while the twice of the ATR as our target price, and then the trade would have continued. And as you can see, this time around most probably we would have made money, but of course that's not going to be the case every time. So sometimes we will be making money, sometimes we will be losing money, and that's the part and parcel of the trading. So I'm not getting particular here that this is profitable only. Sometimes we lose money, sometimes we make money, so we have to keep in mind that aspect as well every time we work on something new. Now let's go back to the Visual J Forex platform. What we have done so far, we did this instrument subscription during the first session of this series, which we started on 6th of May, and that's why the name is May 6th. Now it is 8th May, and most probably we will be finishing this series today, and by Monday we will be working on something new. Now Here we did instrument subscription for the Euro USD, then we defined position amount at 0. We brought in two BWMFI blocks, and we have defined these parameters at hourly time frame for the time period, and shift 1 and shift 2, the look back periods for going back in time and seeing whether the conditions were fulfilled. We are utilizing only two output values of all these four output values. One is MFI up, volume up, and second is MFI down, volume down. So of all these four values, we are basically concerned with two outputs only. Then we got these historical candle blocks as I explained to you on the chart. We look the price action of last hourly candle and also the prior candle to the last hour. So shift 1 and shift 2. ATR, as I explained, we utilize it for the optimizing purpose. Then we have calculated some difference, the high low difference of the last candle, and then this closing and the opening difference for the buy side trade. For the sell side trade, when the closing value is less than the opening value, we do this calculation. We deduct the closing value from the opening value, and we compare it to the 50% of the hourly ATR, and it should be more than that. Here we have defined 50% of the ATR FAT. Then for bringing in the exact entry point, we got these two historical candles of 10 seconds each. They simply check whether the price was just little above the prior candle closing value, and then whenever it starts to shift below it, the trading order would be placed, and we are going for a market open. So straight away a new order would be placed in the system. We define these SLP and TPP as the stop loss pips and the target price pips, and here it is simple. We are utilizing the hourly ATR as our stop loss and twice of the hourly ATR as our target price. Now there is one condition which needs to be added to the buy side, and that is the shift to candles, hourly candles opening and the closing conditions needs to be looked into. So here I will give you a brief idea of what we have done. We are checking that both MFI up, volume up, and the MFI down, volume down, both these outputs are more than 0. These are for different times. This is shift 1 and this is shift 2 on the hourly time frame. At one time, at any point in time, only one value out of 4 is above 0. So it's not possible that of the same time frame you will get two values more than 0. So this time period is different. Then we got the difference between the high low of the last hourly candle close, and then we are comparing it to the ATR. Then we got the buy difference, and we are comparing it to the 50% of the ATR. And just to pinpoint the exact entry point, we are comparing these 10 seconds candle closing levels to the prior candles, hourly prior candles closing level. Now the one thing which we missed out was this, that candle 18, which is defined as hourly with shift 2. We need to make sure that it had closed with losses. That means its closing level was less than the opening level, and when we are looking for a sell trade, the inverse should be true. So straight away we will take the condition for the sell side as well once we are done with these candle 18s. Open and close for the buy side. So we are needed to take the candle 18s, open and close values for the comparison. we need the candle close to be less than the candle open. So this is the condition which we unfortunately omitted in yesterday's session. So pardon me for that. Sometimes you feel something can be done differently, or sometimes if I miss out on something, you can point it out in the comment section as well. And of course, I think it will make our session more interactive, and as well we can build more effective algorithms working together. And I don't think it's that tough to get started and work with this platform developed by the Discovery Bank SA. It's a fairly simple task if you just put your mind to it. And now here that condition should be as it is. First input greater than the second input means candle 24 close needs to be greater than the candle 17 close. Okay, and the candle 25 close should be less than the candle 17 close. And candle 25 and candle 24, let me see. 25 is shift 2, 21 is shift 4, means whenever the value simply starts to rise above the prior candle of 1 hour, it will go in for a buy trade. Now shift 2, that is look back period 2, the candle should have closed less than the opening price. So here we change this parameter and okay. So far so good. Now is the time to start working on the sell side. Let us take this candle 18 condition, and that requirement is where for a sell trade the candles 2 hours back should have closed with green, and then the last candle should have closed with losses. So the candle closing level should have been greater than candle open. Now we bring a couple of if blocks to define the conditions. Here the closing should be greater than the open. Okay, now it's time to turn our attention to BWMFI, and for that we need to take hourly shift 1 and shift 2 these blocks values. Now the MFI should have been up and the volume should have been up, so we take the second value to be 0 and we define the condition that it should have been more than 0 for last candle, and then we go back to us in time and see to it that MFI was going down and also the volume was going down. That means the underlying instrument was losing price momentum, and also fresh trading was not happening. Now shift 2 candle. Now we need MFI down, volume down 16 to be greater than 0. So it should be greater than 0, and third block should also be greater than 0. And we take this and MFI down, volume down, also needs to be greater than 0. Now we turn our attention to the candle 17 and 18's closing levels. We have already considered the candle 18's closing level. Now is the time to look at the candle 17, and for that, first thing first, we need to compare the selling difference to the 50% of the ATR, and just to be sure, I will check it once more that it is ATR is multiplied by 0.5. So here we go FAT. Where is FAT? FAT, FA, and the variable is 0.5. No need to be worried about. Now sale difference should be more than 50% of the ATR. We take in another if, and now this time around we want the first input to be greater than. Alright, now we need to look at the high-low difference. The prior hour's candle high and the low should have been more than the 100% of the ATR. So we take in HLD, and then we take in line 90, and it should be more than the HLD. So we keep it as it is. Okay, now let us go. Oh, let us place this if conditions where they belong. Now once we arrange this again, we will need to look at 10 seconds candle price action. We are mostly done with these MFI conditions, and the difference now. Okay, and our algorithm should also be symmetric. So what we have done on the sale side, only the inverse of it should be true for the sell side. Now, so almost we are done. We will now need to bring in the comparison of the 10 seconds candle with the last hour's candle closing levels. Yes. So we now go to the candle 17 closing levels, and then it will be pretty easier. Open at market. We are going to need it anyway, so we have brought it straight away. We make it sell. Yes. Now is the time to consider candle 17 close. How to create it? It will be here. Okay. And is second. Now it's time to look at the candle 25 first, and it should have closed higher than the candle 25 closing, candle 17 closing level. That is, candle 25 should have closed higher than the candle 17 closing level. And then the shift 1 candle 24, it should close lower. So we take candle 25 data, and the candle 25 is here. Candle 25 is close to be above candle 25 closing level to be compared with candle 17 closing level, and it was less in the first instance. Now we need to look at the candle 24 and its closing level, which needs to be higher. It should have closed lower. No, I think here I have done a silly mistake. The candle 25 is actually the candle of 10 seconds with shift 2. So it should have closed higher, and then the price starts to fall below the candle 17 close, and it should have closed lower, and then we will go for the execution. So sometimes we make such goof ups. It should be less than the second input. Trade amount will be defined at 0.1 million. Stop loss is dynamic. Take profit is also dynamic. Slippage is going to be of 2 pips. And now we need to use our stop loss and the take profit calculations. The SLP will be our stop loss and the DPP will be our target price. Oh, what's wrong? Okay, fair enough. Seems like almost done. Now we save the file and we export it to our Visual JForX platform for doing test run for the amount of time possible. We save it as May 6th. Okay, now it's time to export it and see how it is working. So we test it for maybe a week or two if it is fast enough or less. If it is not fast enough, and then I will leave it to you to do the test run on your own system. Now okay, May 6 comes here. Save. I have a couple of algorithms already running on my account, and now we bring in one more, the newly developed one. Oh, here comes May 6th. We will need to compile it first, and is our code in Java, and it is of around 850 lines. We compile it first. Compilation successful. That means our code is machine readable and it will work if we keep it running also. Now let's test it. Now, just to make sure if our trade is going to happen or not, we utilize this instance of 4th May, and it is starting from the 22 GMT. We will take the testing from 22 GMT, 3rd of May, just to see if the algorithm will trade as per our requirements or not. Oh, let me see once again the date and time. The 3rd of May, and the time is 22 GMT. T2. Let's keep it 5. We are not really going to allow it to run for that much time. It seems for some reason the platform has got disconnected, and we won't be able to taste it. Okay, we got the connectivity back. Let us see if it is working or not. Yes, it is back, and okay, it is connected. So here we do the testing. Default trade amount is going to be 1 million. Slippage, and rest of the conditions we don't change. We have hard coded it, so it should work as per our requirement there. And here is May 6th. Oh no, 3rd May. As you can see, the test is taking a fair amount of time. And I think our other conditions might not have been fulfilled. Oh, the trades, one trade happens somewhere here, but it goes in loss, and that trade is buy trade, and on it we lose around 50 pips, 15 pips. So as you can see, the algorithm is executing the trade. This didn't really go in our favor, but the thing is it is working, and you can do extensive trial run and then see how it works in the longer time frame. So that's it from my side for today's session, guys. We will be back on Monday with a fresh setup. Have an excellent weekend ahead. See you tomorrow. See you on Monday. Goodbye.